Correct, Eric. The interesting thing is that Bob Evans has a lot of great assets. They have a restaurant business that they are working on turning around. Trying to turn around declining same-store sales takes time. It's now been 3 years, which I think is a fair amount of time, without any results in terms of stabilizing or improving the same-store sales at the restaurants. They also have a very valuable packaged food business called BEF Foods. And this is the interesting part about Bob Evans, frankly, because if they were to separate the packaged food business, we would expect that Bob Evans is worth 50% more
than it is
today.
Now, the reason that you and I are talking is because A, it has been 3 years, B, it's time to raise the ante. You're seeking what's called a consent solicitation. Explain what it would do in your effort to try and get this company to break up.
Yeah, so in a consent solicitation, shareholders can raise their voice and either vote for our proposal, which is a precatory proposal purely to separate the packaged food business that frankly has no synergies with the restaurants. And this is something that the CEO has stated publicly, that there are no synergies between the packaged food and the restaurants except for the enterprise level, meaning the headquarters. And that's not really where they make money.
So people might be wondering, consent solicitation, you get other shareholders on side, but it's not binding. It doesn't force management's hand.
That is correct. And what we're looking for is for shareholders to have a voice in this case as to whether they would like to see a company trading at a fair multiple of earnings versus at a depressed multiple. The stock is down 34% over the past 3 years. It has underperformed the restaurant peers by 41% over the same period, and also underperformed the packaged food peers by 94% over the last 3 years.
I have a couple of questions, or at least I'm going to raise a couple of alternatives. Why not just persuade management to rebrand the company as a frozen food business? You yourself, in a September 12th press release, said there are no packaged foods analysts following Bob Evans, even though close to half of the company's EBITDA is generated by BEF Foods. If you got the packaged food analysts to cover it and investors to recognize it, maybe it would get the higher multiple you're after.
Right. So that is obviously the case. And no matter how you look at it, the good thing is that the CEO, Syed Mohseni, he himself claims that he'd be very willing to consider to adopt our plan.
But he's not moving and hasn't been moving. You know, there are other people out there, and I might include myself among them, who wonder, why don't you do what you did back in 2014? You won 4 seats on the board by waging a proxy contest. If management is that intransigent, why not just wage another proxy contest?
Well, that's a possibility.
You might do that.
I'm not saying what we're going to do, but I say anything is possible here, so long as the company is worth significantly more than where it is today. We will consider any options. We also feel that we have made some headway with the management team and that they may be leaning in the right direction with us as well, which we hope.
Tom, I want to bring in another topic if we're going to talk about opportunities. We were just speaking backstage, and you said you've moved to London because you see one of the greatest opportunities for investors like yourself in Brexit. Explain.
Well, the situation in the UK right now is interesting with Brexit. Unfortunately, Brexit is going to slow down growth in the UK. And for companies to continue growing, they're going to have to do transactions. We expect more M&A opportunities. There's no other way to grow. You have to buy revenues. You can't create revenues. The ECB and the Fed is creating a lot of liquidity and pumping up the markets overall. We'd expect this not to continue forever. We're very much, aware.
What's your macro case for the UK economy?
Recession within the next 3 years.
Recession within the next 3 years. And why, generally speaking, recessions aren't good for investors? Are you beginning to build up dry powder now in the hope that you'll be able to take advantage of this situation? What are you doing? How do you do it? What's the strategy?
No, so Eric, our strategy is capital preservation as a firm, and one of our main strategies is merger arbitrage. And that's a great way to preserve capital and to generate this steady recurring income with very limited market sensitivity. Now, in today's environment...
Because it's market neutral, really, right?
Almost, yeah.
Yes. And go ahead, in today's market environment?
No, so in today's market environment, you have to buy revenues to grow.
Because of the fact that the economy is as sluggish as it is, and monetary policy, to your point, just isn't producing the kinds of results that many central bankers hoped for.
Exactly.
So talk to me about the kinds of things that you anticipate. You take your firm, you move it to London, and you're going to start doing what?
I didn't really move my firm to London. Frankly, I've had an office in London for 20 years, Eric.
So it's more about Tom being in London?
Well, I've always been going back and forth to London. The fact is that right now I'm spending more time in London.
Most of your positions right now are in U.S.-based companies. If you fast forward 18 months, what percentage of your portfolio do you think will be in British or European companies because of this Brexit opportunity?
Yeah, I'll tell you, we invest globally, so it could be that the majority is in Japan, possibly. It could be anywhere.
Bringing it back to Bob Evans very quickly, you've got a $50 million position. Why are you pouring so much effort into a $50 million position?
Well, that's a great question. However, I tell you what, it's probably one of the most overlooked situations right now in this industry, and it's probably also the right time, given that we're very hopeful that the management will do the right thing, and purely what we're asking for is for shareholders to have a voice and to vote on a separation on the packaged food business, which would trade at a very high multiple. There's very significant consolidation in the packaged food industry right now. And these companies are selling at 15 times EBITDA. Bob Evans is trading at 8 times only.
Therein lies the opportunity.